Welcome back to the Mining Pod. This is your news roundup. We got, nope, not Charlie. We got Colin and Matt joining us this week to go through Bitcoin and Bitcoin mining news after a word from our sponsors.
Accelerated by Compass is the premier accelerator program for Bitcoin mining sites at any stage of development. Our managed services provide expert guidance in site procurement, construction, energy agreements, and mining operations. Compass helps clients meet timelines and expectations for operational excellence, from greenfield to retrofits and everything in between. Don't just mine, excel. Visit compassmining.io now to discover how Accelerated by Compass can power your success.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
Okay, let's jump right into it. We're going to have our difficulty update, which we do every week with our mempool forecaster, Matt. It's kind of becoming like a weekly segment. It's difficulty adjustment.
He's like a weatherman.
He is a weatherman. At some point, when we have a larger budget, we'll get him like a whole screen, a green screen. Yeah, that'd be kind of cool.
That'd be kind of cool. As you can see, we have a high fee front moving in here to the right.
One of my favorite Twitter posters, gosh, I'm blanking on his name, did that way back in 2019. Okay, we will go from there over to our pleb corner with Tyler from Compass. He's going to come on to talk to us for a brief moment about ASIC prices from what they're seeing and their marketplace. Then we're going to go through some Bitcoin mining news this week, starting off with the Babylon fee pump. If you try to send a Bitcoin transaction at the end of this week, you probably noticed it was really expensive. We'll talk about why. Then we're going to go through Colin's Q2 financial report. Colin did an amazing job for the Mining Pod newsletter, which you should definitely go subscribe to if you click in the show notes. And we'll go through all 7 different charts that you should know about for public Bitcoin miners. Then we'll go over to Bitfarms land. They're dealing with Riot. They got Stronghold going on. They got a lot of news on that front. So we'll sit there for probably a bit. And then we'll finish up with a hair-pulling story about the IMF trying to attack our favorite Bitcoin miners. So that's the news roundup for the day. Gents, let's get going. I'm going to move us over to the mempool. Matt, you ready to dive in with us?
Yeah, I'll forecast the mempool. And then afterwards, we'll do traffic and sports.
Traffic and sports with Matt afterwards. Okay, take us away.
Yeah, so we're about halfway through the difficulty adjustment period. I think there's about 900 blocks to go. The previous difficulty adjustment was a downward one, about 4%. And it looks like we're going to go up about 2.5%. So just to reclaim a little bit of that. And I think the story broadly here is like price in the last week is up about 3.5%, right? And I think in this environment, everyone's kind of tight at the margins. And so difficulty is actually following price pretty closely. But yeah, I mean, there's not much to talk about here. Like in the broad scope of things, miners are still in a pretty tough place. Despite price increasing quite a bit, the halving effects are continuing on, right? We're at about between 40 and 50 dollars per petahash on the hash price. And so, everyone is kind of cost conscious and trying to squeeze out everything they can from their margins. That's it. Now to you for sports, Will.
Sports, just getting ready for the Denver Nuggets season. Training camp will be starting soon here. I'm excited.
No one cares about the Nuggets. It's football season, baby.
Hey, there's a decent amount of Mining Pod listeners.
Son.
There's a lot of Mining Pod listeners in Colorado. So I'm sure there are a few of them are Nuggets fans.
Well, Matt and I are Southern boys. We care about college football.
I do care about college football. But I will actually bring this back to mining and say the latest excitement in the ecosystem is what's going on with transaction fees, which are very apparent on the mempool.space screen we were just showing. So, Will, what's going on with the fee environment?
Well, before we go to fee land and talk about Babylon, excellent segue. But we got to bring up Tyler from Compass to talk about ASIC prices. Tyler, welcome to the show.
Hey guys, yeah, thanks for bringing me on. What I wanted to kind of share, which is super interesting. I mean, all of us think that Bitcoin price is going up soon. Tomorrow, next month, who knows when. Maybe we're naive, I don't know, but it seems like all the people that are using the Compass Marketplace believe the same thing. There's a lot of people going in and buying S19J Pros, which right now are not very profitable. They're buying them at a loss, anticipating that price is going to go up quicker than difficulty, and they might be very valuable in the future. I don't know if they want to offload the hardware when the hardware appreciates, or if they're just trying to buy them when they're cheap so that they can acquire a lot of Bitcoin when they are profitable. And I don't know, I think this is telling that people are doing so. The whole game when it comes to mining is kind of unfortunately like chasing efficiency. You have to make sure that your fleet is efficient as these new models come out, and it's a very, very difficult game to play. Matt, I want to actually dive into this with you later, because you seem to have a good pulse on these publicly traded miners who are kind of following a similar strategy. I did not anticipate that the S21s would be as efficient as they are. Considering how efficient the S19J Pros are. I thought they would kind of taper off over time, but out of nowhere, they came out, massive efficiency jump. And even so, people are still just buying these old models instead of buying the new models to improve their fleet efficiency. So I have some examples we can kind of go through how miners need to think about chasing this efficiency to make sure that they're competitive year over year over year. But yeah, Matt, what are you seeing with like publicly traded companies? Because I know big players are doing a similar strategy.
Well, I mean, I don't know how much I honestly will comment on the public listed miners, but I would just say generally when you're looking at these machines, maybe the case for buying one of these older rigs is just the time to break even, right? It's kind of like an old miner metric that isn't necessarily talked about as much anymore. But if the upfront cost of some of these newer machines is quite high, and your margins are, pretty thin still relatively, then it might take a long time to actually pay them off. So they're taking into account, I think, a lot of factors when they're actually buying rigs, right? Depreciation is a major kind of expense if you look at it that way for miners. Colin, what do you think about the publicly listed miners and kind of this approach, and I guess just generally picking your hardware?
Yeah, well, so I maybe a counter take here from a lot of the analysis that I've done. I mean, the leading public miners have just been piling into next gen machines for good reason, right? I mean, we saw Riot, for instance, buy just insane numbers of WhatsMiner M50 and M60 series at the end of last year. The S21 was quite popular with a lot of Bitcoin miners as well. You had Bitfarms and CleanSpark and a few others order those. So I'm curious about who is buying these S19J Pros, because to your point, Matt, there is a consideration for payback time. If you have cheap enough power, and this has been very popular often with off-grid miners on oil and gas sites, as long as they have enough uptime, they'll run these older generation machines all day long because the CapEx is laughable compared to how quickly they can ROI them, right? But then there's another part of me that thinks, Tyler, to your point, is this like the S9 trade last cycle? Where it's like, we didn't quite get to the point where people were giving away S19J Pros. Maybe we will, let's not speak for the future just yet. But last cycle, S9s were basically, you couldn't get someone to take them off your hands. People were giving them away. And then suddenly, a few months later, when hash price was ripping in 2021, those things were selling for a couple grand, right? So I wonder if people are having the same mentality with S19J Pro. Are they going to try to flip these in a few months? Are they hoping that they can? It's an interesting trade. We'll see if it pays off.
Yeah, I will say that, we have this kind of retirement program. I don't know why my TV's seizing in the background, but we have this retirement program where people can take old gen machines and they can kind of cash them in, kind of like a phone trade up. You have I don't know what number out there on. You have an iPhone 15, bring it in, we'll give you a couple $100 to trade up to the iPhone 16. So we have something like that, and there are a lot of players that are either scooping up those old units, or they're taking their existing fleet and they're trading those out for the new gen. So it's just like an interesting strategy to see how people are approaching the next generation and prepping for whatever's about to come. I know the big players, they have a much bigger bill every single month, so they're probably swapping out as much of their fleet for new gen as they possibly can. But it's just like interesting to see what people are doing from smaller levels.
Yeah, on that smaller level front, I do have a question for you, Tyler. So since you guys operate this marketplace, how often do you guys talk to customers, or do you get information from clients about people like turning over units and what the things are expressing from a hosting perspective? We've had a few hosting shows here and there. The hosting business is pretty straightforward, so there's not a lot to digest there. But given that you guys are like kind of operating in this place, I'm curious, like how much do you guys like kind of help people choose to like flip through different units and like move on to new ones? To me, I'd be like a little worried or anxious about that, given that difficulty is always going up so hard and fast, and then like cost to put units in a new facility can be hard to find a new place.
Yeah, so I mean, something that I've been doing this year is actually trying to get more customer interviews for product standpoint, which is really funny. Now I'm actually talking to customers saying, what is your intent? Are you trying to grow your fleet, trying to chase efficiency? I think your question was just what am I hearing? And it's exactly what we're seeing, right? Some people are trying to double down on these cheaper units, waiting for price appreciation. They got a little bit of a savings account, or they're not worried about the mining at a loss for a minute, while others are just doing anything they possibly can to get their efficiency down, and just like prep for any scenario.
Yeah, it's like an interesting perspective on how risk adverse the hosting crowd is for Bitcoin mining, which a smaller percentage of the network, but interesting percentage. Okay, we'll finish up there. Tyler, any last words before we move on to talk about Babylon Chain and fee pumps?
Nope, I'm all set. Thanks so much.
We'll see you here soon. Peace. Okay, let's go over to Babylon land and watch this quick clip from a recent interview on Bitcoin Season 2. Charlie, who's often on this show, is talking with David Say. He is the co-founder and creator of Babylon Chain. And why is this important? Well, this morning, fees pumped really, really hard. We saw a Bitcoin block with 15 Bitcoin reward in it, and then a bunch of Bitcoin blocks with like 9, 6, 5 Bitcoin rewards in there. So it caught some people by surprise, and we can discuss all the reasons that this is, of course, important. But let's listen to this clip really quick.
Okay, because they provide us security. So phase one is to bootstrap the system by recruiting a bunch of Bitcoin stake. Okay, so now in phase one, Bitcoin holders can stake Bitcoin onto the protocol. Okay, and after we accumulate a sufficient level of stake, then in phase two, we will now launch a few chains, starting with the Babylon chain. And those chains will receive Bitcoin security from the stake that we accumulated from phase one. So that's how we bootstrap the system. We start with the supply, and then we bring in the demand.
Cool. So what you just heard there was David Say describing how Babylon Chain works. It's basically a network that allows proof-of-stake networks to tie their security to the Bitcoin chain. And what does this mean practically for miners? Well, like, you don't really have to care about Babylon at all, but you should be aware of these meta protocols that are exogenous to Bitcoin, because they're going to impact your revenue for Bitcoin mining. And like I said a minute ago, we saw fees pump to a crazy amount this morning. One block had almost $1 million in total rewards, Coinbase and fees. So Matt, I'll toss it over to you. Any thoughts on that at all?
Yeah, for me, I'm at least initially skeptical of kind of these layer 2. So I can't speak as much about the meta protocol itself, Babylon, but where these things actually impact the fee environment on Bitcoin, I'm very interested in. And so I'm interested in, honestly, like out the gate, who actually won this 15 and 9 Bitcoin blocks. I mean, we're talking about 5 times the normal block reward here.
Yeah, it looks like it was Antpool won the 9 Bitcoin, then Antpool won the 15 Bitcoin, Foundry won the 12 Bitcoin, Antpool won an 8 Bitcoin, Via won an 8 Bitcoin. Foundry won a 7.
This
Mar
is
won
why
a
FPPS
6.
trends towards centralization, is because of
Yeah.
shit like this. This is right here.
I was wondering if we'd get to this topic.
You
There
took
was
the
a lot
word-
of tweets about FPPS, especially from Bitcoin Mechanic this morning on
Yeah.
Twitter.
Yeah.
Yeah.
I don't know. That's kind of a tangent. Maybe we've talked about it a lot just for another episode, but I like what they're doing at Ocean. But to fix FPPS, you need to fix FPPS. Like full stop. You can't just create a new pool and expect all the hash rate to go over there. Shout out though. Love you, Bitcoin Mechanic. Don't like the spam filters, but I like Ocean Pool.
Cool. I guess there's not much to it besides that, because I don't really have a desire to go into Babylon Protocol and all what they're doing. If you do, though, go check out Bitcoin Season 2. We dropped an exclusive interview with David Say, the founder of that, which we recorded live in Bitcoin Nashville. Let's go to this more pertinent news for Bitcoin land, which is Bitfarms expanding its size.
Yeah, so a couple different interesting news bits that I guess are Bitfarms related happened this week. So first is they scooped up Stronghold Digital. This is actually the result of 3 years of ongoing discussion. So this isn't something that seems to just impulsively be happen. The deal was valued at 125 million in equity with an additional 50 million in assumed debt. The kind of other thing that's going on at the same time is the kind of hostile takeover that Riot is trying to put onto Bitfarms. And so they've reached a level that is nearing what's called the quote unquote poison pill level. They're at 19.9%. Will, you want to explain the poison pill level for
the poison pill? Yeah, I'll explain that. And I'm going to throw the first topic back to Colin afterwards. So Colin, just you be ready. I'll be coming for you. So for this Riot thing, right, we've been tracking it all summer. It was first kind of announced, I'd say June-ish, if memory serves me right. Bitfarms had a lot of leadership transitions, some shakeups. Their former CEO was kind of kicked out, but then sued over being kicked out. It looked like it was just kind of resignation. Turned out it was more than that. Then they had a leadership shuffle. Ben Gagnon, who was the CMO, Chief Mining Officer, not Marketing Officer, this is Bitcoin mining. He took over as CEO. He is a true Bitcoiner's Bitcoiner. And so a lot of people in the Bitcoin community were very excited for that, as opposed to some of the older faces at Bitfarms, which were seen as more TradFi. Confessedly, I don't know the history of the former executives, so that might not be a fair characterization, but that's definitely what I've seen on Twitter. So for this poison pill, essentially Riot has been steadily picking up more of the outstanding share pool of Bitfarms with the intent and purpose of totally acquiring Bitfarms. And they can't quite do that because there is this poison pill, which I'll describe in a second, at 20%. In the meantime, what they are able to do is exert pressure on the board of directors and start installing people who are more pro-Riot or maybe pro-leadership changes within Bitfarms that help Riot out. So it's unclear what that exactly means, but we do know that there has been some leadership shakeups, and one of the key executives that Riot actually wanted ousted did step down the other week, and that was one of the long-term co-founders. So having that stake in the company does really matter. There's a bunch of things around this we were talking before the show that have to do with how these things work as C corporations or even just public companies. And I don't know the intricacies of those things. Lawyers who make a lot of money do. For this poison pill, we can scroll down to the article from the Miner Mag. Bitfarms adopted a second shareholder rights plan known as a poison pill strategy, granting shareholders one right per share exercisable if any entity acquires 20% or more Bitfarms shares without a permitted bid. So initially, this poison pill was actually set at 15%, and then the Ontario Capital Markets Tribunal sided with Riot and moved it to 20%. What does this really mean?
With Bitfarms, you mean?
Sided with Riot and moved it from 15% to 20%.
Oh,
so initially, the poison pill was at 15% that Bitfarms set, and then Riot got upset, talked to the Ontario Tribunal, and they had it moved to 20%. What does this really mean? It just protects Bitfarms in case they want to stop this takeover, this hostile takeover. There's different ways that they can dilute the shareholders and dilute the voting rights and governance rights of different shareholders in order to protect the company and maintain its independence. So we will continue to watch this. There is a vote scheduled for October 29th, a little bit away, but that's going to be very important for the future of Bitfarms. And if they do indeed get taken over by Riot, or if Riot maybe loses interest or whatever happens here. I want to go to the other part of the story, though, and maybe, Colin, you have some follow-up on what I just talked about, and that's the Bitfarms and Stronghold story.
Yeah, so I think the timing of this is interesting. Like you said, this has been in the works for about 3 years. Rumors have been circulating over the last, I would say, quarter, maybe half year, about it coming to the finish line. And obviously it has now. And the timing of this, I can't help but look at this as being almost in conversation with the Riot takeover. That maybe that's not fair. I just, the timing is so juicy that you can't help but speculate. And to your point, Will, I don't know anything about corporate governance. I don't know anything about how any of these takeovers work or shareholder rights or anything like that. Like you said, there are a lot of lawyers who get paid a lot of money to make sense of these things. There are a lot of people who have spent their entire career in finance who understand these things obviously a lot better than a couple of talking heads on the mining pod. That being said, I wonder, my biggest question is, does this merger insulate Bitfarms from the takeover a little bit? Does this give them a little padding? Will this help? How is the stock going to be restructured after the merger? What dilution will occur? I'm curious to see if this will do anything to help Bitfarms during this scenario, which, if it does, it's a smart play, but I think that's a topic for further discussion and further probing. Hopefully we'll have a mining stock show about it soon. But Matt, you want to jump in?
I was going to say, a couple details to note on this is that it is expected to, while it's announced now, close in the start Q1 of 2025. So there's a little bit of time before this is final. And then just, some things that people may also be interested in. If, they would expect to basically take on about 4 exahashes with this deal. But if they upgraded the mining fleet, it was expected to be around 10. So just some things to consider there as kind of like some closing thoughts on this.
Yeah, I'm going to throw in a few more thoughts as well, because this might be like our bigger mining news pieces this week. From a standpoint with Bitfarms, this does move them more into the United States. It's interesting that this deal took 3 years to close. This fits in with like their profile of securing cheap alternative sources of energy. They're very green from their energy sources, but they've mostly been international, not been a U.S. focused company. Now they are like a Canadian company, but they do, I believe, trade on the NASDAQ or New York Stock Exchange. So
they do trade on the NASDAQ. And just to highlight that, Stronghold's operations are in Pennsylvania, and they operate, unless I'm working with outdated information, Will, tell me if I am, but they operate a coal refuse power plant. Like they own the power plant, and that's where their Bitcoin miners are. So super interesting play from Bitfarms here, because not only are they going to expand their hash rate, and like you said, Will, expand into the U.S. Currently, their only U.S. operations, I believe, are in Washington. I could be wrong about that. But they're also going to have a harder infrastructure play with this, right? Like they will legitimately be able to have, they're going to be operating a power plant, and they will have the ability to either mine with that megawatt capacity or sell to the grid, because it's directly hooked up to the grid in Pennsylvania.
Yeah, they're in the PJM grid system, which has been a hotter place to mine Bitcoin as of late. A lot more interest than I'd say ERCOT from the chatter I hear around different conferences. I think people kind of know the ERCOT game at this point. Still,
and Texas is so saturated too.
It's still possible to get like something in West Texas. From my understanding, for like 3.5 to 4.5 cents, but I just think like people are looking a little bit elsewhere, and the Ohio, Pennsylvania area has been a little bit more interesting to people.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Colin published this awesome piece in the Mining Pod newsletter. You can go to miningpod.blockspace.media and you can sign up for the newsletter there, or just click in today's show notes and find it. Colin, walk us through what you wrote about here.
Yeah, so just a quick overview of some Q2 numbers that the public miners published. These financial reports are filed with the SEC. All public companies have to do them, and they usually come in about a month and a half after a quarterly close. So we finally know how Bitcoin miners are doing after the halving, and it's not terrible, but it's also not very good. So a few things to highlight. So as we can kind of expect, they took a hit on their revenue, not as much as you would expect, potentially. A lot of that has to do with expansions from these miners. CleanSpark did a really good job of acquiring new data centers, acquiring grid, although that wouldn't have impacted this because that happened at the end of the quarter. But they acquired some data centers in Wyoming, and I want to say Georgia or Mississippi. I can't remember which one. And a lot of the other basically every other miner expanded their hash rate over Q2, and they shored up some of that revenue hit that they took from the halving. You scroll down to the next chart too. I like to take a look at this one because I think it puts a lot of the AI hype into perspective for right now. A lot of Bitcoin miners have been chasing alternative revenue streams over the last year or two. They're planting the seeds. They have not harvested the fruits of their labor yet, though. As you can see, HPC and AI segments for Core Scientific and HUD 8 were a sliver of their revenue, and those were the largest AI and HPC revenue generating business lines out of the entire bunch. So still a lot of room to grow there. And that's going to be the biggest story for some of these miners, I think, over the next 2 years. Can they actually make that transition happen? A lot of megawatt capacity expected to come online over the next year.
Bitdeer, let's go.
Yeah. But it's like announcing hash rate expansion plans, right? I always want to caveat this chart. This is what they report as miners. And of course, they're going to tell you the better story instead of the worst story because they want to pump their share prices. That being said, if Bitdeer pulls off what they want to do, they will become the largest Bitcoin miner by megawatt capacity at 2 gigawatts at the end of 2025. They have even more planned for 2026. And if Riot and Mara execute as well, they will have a gigawatt. And who knows, maybe Core will join the gigawatt club at the end of next year too. I have a hard time believing they won't if they're still solvent.
Just hearing the gigawatt club is wild.
The gigawatt club. Yeah, it's kind of cool. So yeah, I'll go back to that chart. We can sit down for a second. Marathon, Core will probably get there soon. Riot is going to have, their campus is going to be 1 gigawatt at Corsicana, and then Bitdeer.
And Bitfarms, this doesn't include Stronghold. So I don't know how many megawatts that power plant is.
So they'll have just under 1 gigawatt, I believe. I think 950 is what the article said. And then it said they have like 1.6 in the pipeline, which I don't really know what that means. And I don't know if that includes the 900 megawatts, but yeah, everyone's getting big now, like
everyone's
big.
Getting fat. Yeah. Getting fat and happy.
Ben Gagnon in the Bitfarms release said that he anticipated the energy portfolio to go to 950 megawatts.
Okay. So, we can round up for Core and Bitfarms. They're basically at that gigawatt club. And one other thing to highlight, though, megawatt expansion doesn't exactly mean that you're using those megawatts as effectively as other miners. Perfect example of this is Hive. They have the smallest megawatt footprint of all of the miners in our update, and they are also the most efficient of turning those megawatts into revenue. This is an important chart. It's more important to look at profit margins. I'll do EBITDA next quarter, I think. But going to profit margins, if you'll scroll down to, I think the last chart we'll hit on, because the cash and debt position isn't as interesting. Hash cost. So this is a metric that we use to measure how much a Bitcoin miner spends on the hash rate they produce. It is inversely related to hash price, which is how much revenue they can produce from a unit of hash rate. And this is from our friends at the Miner Mag, and it includes both direct operating costs, payroll and SG&A, and financing costs. And the scary thing about this chart, this is perhaps the most terrifying chart in all of Bitcoin mining right now. If you're invested in these public equities, only BitDeer is currently mining profitably under hash price of $43 per petahash per day. Now, hash price is at like $50 per petahash per day, given the recent fee bump. That's going to come back down. That's a blip. So let's just assume that hash price is around $43 per petahash per day. Only BitDeer has a positive hash cost currently. That's terrifying. Everyone should think about what they're doing when they smash buy on a Bitcoin mining stock. You're going to need Bitcoin's price to surge for this to change. At least that's the easiest route out. The other things that these Bitcoin miners can do is they can lower their SG&As, and they can also improve their fleet efficiencies. Improving power costs is more difficult than those two. So I don't want to scare everyone. They'll be fine. But like something's got to change over the next year. You know, they can eat this for a while because they have really good cash positions and they can always sell equity. But ideally, you want to see those hash costs improving.
As we always say in the mining pod, lower your SG&A unless you are sponsoring the mining pod, and then increase that line item on your SG&A.
Matt, you were trying to jump in there?
The great equalizer in mining is the difficulty and adjustment. I just want to remind everyone out there that everything will be okay.
That's a good balanced perspective.
For some of you.
For some of you.
It will, yeah, I don't know about that. Okay, let's go to this last one. This one, again, is just to kind of piss people off, to be honest. And it's this IMF blog that came out. I'll intro it really quick and then throw it over to Colin for a Alex Jones-esque take on why this is dumb. But
the globalists want us to reduce our carbon footprint.
Carbon emissions from AI and crypto are surging, and tax policy can help. Subtext: crypto mining data centers now account for 2% of global electricity use and nearly 1% of global emissions, and their footprint is growing. The authors of this piece from the IMF's Economic and Taxation Division are basically saying we need to increase taxation on both crypto mining and AI data centers in order to meet different quotas or goals for global warming. The one for the tax increase for crypto mining is quite a lot. 85% in average electricity costs for miners is what they're saying. Levying a tax like this would raise an annual government revenue of $5.2 billion globally and reduce annual emissions by 100 million tons, or about the emissions of Belgium. So we've seen these things float out quite a bit. This is like the IMF's thing to trigger everybody. And this is not policy, it's just a blog. But want to get some thoughts as we close out here, Colin.
They want the electricity for themselves so that they can sacrifice babies to Moloch. That's all they want to do. And they're going to tax us, and the globalists are going to try to win. Anyway, shout out to Alex Jones, funniest person alive. 5.2 billion annually. What that would fund the federal government for what, a day?
I mean, hours.
See, this is when you really look at the dollars and cents of these things. For anyone who has any financial literacy or pays attention to how much anything costs to run, especially governments, tax policies like this are so naked in the sense that you know what they're trying to do. They're just trying to hamstring the industry, especially for Bitcoin mining, right? They'll tax the data centers and they'll be fine. Those companies, I mean, it's not a good thing, but they can stomach that a little bit more. If you tax Bitcoin miners at whatever ridiculous rate they were just trying to levy, so many of these mines are going to go out of business. A lot of the public companies that would be subject to something like this would have a huge headache on with regards to their operating costs. Yeah, I mean, I obviously lean towards a more libertarian viewpoint here. I don't want the IMF, an unelected council of bureaucrats basically levying for taxes that do nothing but harm an industry that's not doing anything to harm anyone else. I don't know what else to say about this other than trying to tax these companies based on their carbon emissions is just ridiculous. It's authoritarian, and it doesn't even make any sense because they're not the ones producing the carbon emissions. Those are the those are the grid operators. Those are the power plant operators. If you really want to reduce emissions, go to them, like have them, I don't know, build more nuclear. I mean, that's the thing about this too, is none of this really matters because ultimately, if I don't know, sorry, I sound like Peter Thiel on Joe Rogan. There's so many different routes that you can go with this, but at the end of the day, you're not going to lower carbon emissions by taxing these companies. You're going to lower carbon emissions by deploying nuclear, by setting up solar and microgrids in neighborhoods where it makes sense, and by deploying natural gas in place of coal. But none of this matters if China doesn't do the same thing, and they're building coal. So I don't know. It seems dumb. I hope it doesn't pan out. I'm tired of these unelected bureaucrats trying to create rules for the rest of us.
I love this. I think we can close on that note, honestly. The IMF will continue to put these out, and we will continue to react to them. They're just having fun. Charlie is not here, so we'll close out with you two. It was fun. Colin,
Seems
Matt.
sad about it.
I know. I miss him. But we'll see him on Slack in a second. Colin, Matt, anything else before we close out?
My final thoughts. There are legitimately a group of people in this world that think throwing taxes at the government will solve problems. No, go get help. read up on history. Just go touch grass. Go get spiritual. Go get a hobby. Politics should not be a hobby, everyone. That's my final thought.
The Rocky Mountain Libertarian from Tennessee is speaking up on the chat. Okay, we'll see you guys next week. If you enjoyed the show, go check out our interviews. We post those on Tuesdays, and we put on news roundups on Fridays. We have other stuff as well. Bitcoin Season 2, check that out on YouTube or The Quark Show. You can find all this and more at blockspace.media. See you next week.